I created this Google sheet to do stock price variation analysis, which can be very helpful for day trading or for doing any kind of short-term trading within a week. And overall, what it does is it pulls all the price data, the open, low, high, and close price points over a date range that you request for a particular stock symbol. And then it has formulas which performs certain kinds of analysis on that data. And it also breaks down for you by day of the week all of the different stats. And I'm going to explain in more detail, but just wanted to give you that quick overview of what it actually looks like. Now what I'm going to do is actually hide temporarily these rows just so that I can show you this part. And basically the first thing you do is you enter the symbol. Actually, I'm going to delete this data just to empty it out. And as you can see, when it's empty, you're going to get nothing. All right. And then when you're ready, you put a symbol. So I'm actually using Penn for this example, which is Penn National Gaming. Once you type in the symbol, it will automatically pull up the company and the current price. Right now, the market is still open, so this price will literally change every time the Google Sheet updates. Now, the number of days is how far in the past you want to go. The start date and the end date. The end date is assumed to be today. You can change it. However, there's a formula here that pulls up today's date. So if you erase the formula and you want to put it back, you'll have to go here. I put the formula in here for convenience. You can put the formula back later. But you don't really need to change this section at all. I'm just saying if you wanted to change it. All right. So what you do is you just put the number of days. Let's say 90, the last 90 days. Right. The end date is going to put today's date. Start date 90 days in the past. That's April 30th. Okay, so this is the date range you're looking at. Then what it does down here, as you might have seen, it just pulled up all of this data. Okay, so these are all the dates of the actual trading days, right? You're not going to see weekends here, only trading days, only days that the market was open, right? You see those dates, you see the open prices for that day, you see the low prices for that day, the highs and the close prices. These are all pulled using Google Finance, which is a built-in ability of Google Sheets. Okay, then over here, I have calculations for each of these days, right? So here I have, for instance, the percent change for each day, right? The amount, the percentage by which the price changed from the previous day closing to the close on this day, right? So from the day before to this day, right, went up 1.51, went down, right, minus 0.9, went up, went down. Okay, and you can see these actual numbers, and you can go through. It's just interesting sometimes to look at the numbers. I also have the days of the week all the way on the left, which are pulled automatically from the dates using an Excel formula. All right, and then you get to a point, of course, the last date is going to be July 28th. Today, the market is still open, so it's not going to give you July 29th. Okay, and you see that there's no more data. Of course, everything's going to go blank under here. Okay, so this is the last day, right? Now, we have the percent change close to close. We also have the range. So basically, this is going to be great if you're day trading and you want to know, well, what kind of range does it have within a day, right, for you to make the most profit possible, right? And you can see that this one has Penn National has a pretty decent range within a day, right? These are inside intraday within a day, right? From low to high. So from low to high, the percent difference. Okay, open to high. So what is the difference between, in other words, the open price for each day and the high price? And we see here the open to high that it goes up 2%, right? From open to high, it went up, I should say, 2% on that day, 2.37 here, 1%. So you have all these different values, right? And you can get an idea of how high it goes above the open. Then you have the open to close gap, which just gives you an idea of where it starts to where it finishes for that day, for where the market, where the price opens to where the price closes, right? Gives you an idea of the difference, the price difference. Okay. So now, looking at them individually, of course, there are a lot of numbers, and so just looking at them this way, I mean, it gives you an idea, but you really need some kind of summary of what's happening here. And so that's what is provided here. I'm going to reopen this. All right, I just had to hide it so I could show you more down here. But now this gives you a good summary so that you can actually look at the summary. So now the average open. So this is the average of the open prices. So for all the open prices in here, this is the average of those prices. This is the minimum, the smallest that ever happened. This is the maximum that ever occurred. Okay, so smallest that ever occurred, maximum for the open. For the lows, same thing, average, min, max. For the highs, average, min, max. And for the close, average, min, max. You can see the formula here, right? Max, min, and average. Okay, for these. Now, same thing for this percent change, right? Same thing, average, min, and max of these. Okay, same thing for the range. Same thing for this open to high and open to close. So we can actually see the average of those, right? So this gives us a good idea. If we see that the range, the average range is 4.63%, that's actually pretty large inside of a day, right? Of course, if you're looking at penny stocks, you're going to see even larger ranges than this percentage-wise, okay? So you can try different stocks and you're going to see very different results. Okay, so it gets pretty interesting when you really start putting different symbols in here and you see the different results. Now on this sheet we have the weekday stats. Basically everything's broken down by the day of the week. Alright, starting with the 4 price points, open, low, high, and close. So the way you use this is you say Monday open, and this is the average open price for Mondays. So basically, if you were to go here and you were to go through these dates, if you were to look at all of the Mondays and take those open prices for each Monday that occurred, for each Monday, and you were to take all those open prices and average them together, that's what this is. Okay, an average of those open prices. Tuesday, the same thing. If you were to take all the Tuesdays and average them, so this is the average open price on a Tuesday, average open price on a Wednesday, average on a Thursday, average on a Friday, for the past 90 days. Okay, remember there's the number of days here. Okay, so there's always a time range. You have to keep that in mind. All right, Thursday and Friday. Okay, same thing for low, high, and close. It's just the average per day, right, for each day of the week. Now, you can look at the numbers. You can see which is the lowest for yourself, and you can see which is the highest, of course, right? I mean, that's something you can do. However, for your convenience, I also added a formula here, 2 formulas that will actually automatically tell you which day has the lowest, which day has the highest. So if you just want to kind of look at it right away, this is the lowest, 77.81, and we see Friday has the highest of 78.50. Right, and it just kind of tells you that right away. But of course, you have to look at each day of the week to actually see kind of like the, I guess you could say the pattern or something, right, from one day to the next. Okay, so that's just looking at the actual prices, right? That's what this is, looking at the actual prices. Now here, I'm looking at the variation. Okay, so the percent change, the range, which is the low to high, the difference between the low and the high, the open to high gap, the difference between the open and high, the open to close gap, right? The difference between the open and the close. Okay, and again, looking at it by day of the week. So saying that, okay, the average percent change on Monday is this much. On Tuesday, the average percent change was that much. On Wednesday, the average was that. Thursday and Friday, right? And we can see these differences. Again, you get the lowest and the highest day. Okay, pretty self-explanatory once you understand, right, that these are how to use this. The range, low to high, same thing, right? Monday, this was the average range. Tuesday, this was the average of the range. Wednesday, this was the average range. Thursday and Friday. Right, and it's interesting to see that these numbers can be significantly different, which leads you to believe, you can pretty much see that certain days of the week tend to have certain results. You could say, right? Okay, and to really, I'm just going to kind of go off on a little tip here of what I do to try to use this. One thing is that you can try different date ranges. So like right now I'm doing 90 days, and then what you can do is you can go further back, right? You could say 180, and you could look at that as well, and then you can see how the numbers differ, right? That's something you can do. So you can see, like, is that particular day of the week still the higher day? You can just kind of look at how it changes for different days of the week, right? That's something else you can do. Now, okay, so that's pretty much, the average of each of these things per day of the week. So I think this is probably like, as far as analysis, I think this is the most useful, immediately useful part, is looking at the average of each of these by day of the week. All right, because it's a percentage. So you're not dealing with an exact price. You're looking at actually like a behavior. All right, a certain kind of behavior. All right, as far as how the prices change. All right, now minimum and maximum, these are good just to see like, what is like the lowest that it has ever gone, right? Or what is the highest it has ever gone, broken down by weekday. Remember that over here, you already have the overall min and the overall max. Just want to remind you that you can already see the largest range you ever had in the past 180 days, 18.15%. The lowest range you ever had, 1.72. So you already have these mins and maxes overall. What this is doing is giving you the min and the max per day of the week. Remember, the whole point of this sheet is to break things down by the day of the week. Okay, Monday, Tuesday, Wednesday, Thursday, Friday. So you can actually look at it per weekday. So now we're looking at what was the lowest on a Monday. What was the lowest percent change on a Monday? What was the lowest percent change on a Tuesday? What was the lowest percent change on a Wednesday? So on and so forth, right? And then out of those, what was the lowest of the lowest, right? So Thursday had the lowest, right? And Friday had the highest lowest, right? If that makes sense. So the lowest percent change on a given weekday, that Friday's minimum percent change is the highest, basically, of all the different minimum percent change. Right? Okay, so to me these are just like extra, things. The same thing with the max is just the opposite of the min, right? What was the largest percent change it had on a Monday, on a Tuesday, on a Wednesday, on a Thursday, right? What was the highest range it ever had on one of these days of the week? All right, so it's basically the same idea. So to me these are like extra kind of interesting things to look at, but for me, like, the average is really the thing, Now, however, keeping in mind that basically, remember that averages, the thing about averages is that they don't, there can be offshoots. Let's say that, right? There can be offshoots. So for instance, the average here, you see that it's 5.68%, but you have a max of 18.15. So there's some offshoots that, like some maybe unusual things that might happen, because if we look at the range, we don't really see 18% here, right? We don't see that happening here, right? That's not a normal occurrence, right? So keep in mind that there might be some offshoots, and sometimes these offshoots, okay, that occur, they cause a certain day of the week to be larger or smaller than the rest. So in other words, okay, so take for instance the fact that you had 18.15% range, right? That was the maximum range ever. Okay, just remember that number, 18.15%. I'm going to hide these. Okay, if you look at the ranges, I'm going to find that number. I'm going to see when that happened, because remember, we don't actually know when it happened. We know that it happened. Okay, so where is that range, that 18.15, right? So I'm looking to see, here it is. Okay, so here's that 18.15%. Okay, it happened on a Friday, March 5th, right? The low was 95.38 and the high was 112.69, right? 18% difference. Okay, so what will happen is that because of that, Friday, let's see what happens if it had some effect on Friday. All right, when we look at Friday's average, okay, it's 5%. Okay, I mean, it didn't blow it completely out of proportion, because I guess because it only happened that one time, But that does affect the average for Friday, right? So this one offshoot makes Friday's average higher, perhaps. But imagine, really, I mean, a better demonstration of my point would be if this was like something crazy, like 100%. Right, what would happen is Friday would have this really high average, but not because that's a normal thing for a Friday, but because of this one Friday, right, where it just really jumped very high. So that's just something to think about, you know. Just kind of an extra thing to think about when you're doing this. But basically, to get started, I mean, with this, you know, just get a copy of it, look at it, you know, see if this is in any way useful to me. I mean, for me, I found it to be, I mean, I'm really very early still in my process as of the date of this video of learning about this. I'm not an expert in trading or in the stock market or anything like that, but I have pretty good Excel knowledge and experience in creating Excel systems. So basically, I have applied that knowledge to creating the system based on what I've learned so far. And so I am finding this analysis to be both interesting and applicable in some ways in the actual decision making, as far as like what stock has certain behavior. Like if you want to do day trading, you want to make, you know, as much money as possible, you want a large range. So we can compare it, for example, to Apple. You'll see a big difference in the range. Okay, you see how the average range is only 2%, right? So there's a big difference in range between, like, you know, a stock like Apple, where the range within a day, remember this is inside of a day, it's only 2%. Okay, that's the average. That's the most range you ever get out of it. So you're not going to make a ton day trading on that, right? But if you take the Penn National, the average range is 5.68%, right? You have more range. And then if you take a penny stock like Gevo, for instance, okay, look at this range, 10.66%, right? So with a range like this, this is the average range. I mean, look at the maximum range. It was once 28.25. Okay, the lowest it's ever been is 3.19 for the past 6 months. 3.19. That's the lowest range it has experienced in the past 6 months. It's never been lower than 3%. Understand what this means. It's never been lower than 3%. Okay, for the past 180 days. All right, so this would be, you know, potentially, right, this is a good choice for day trading because it has the range for you to make, you know, if the range is 10%, then that means you could make up to 10%, right, within that day. If you get in low enough and you get out high enough, of course. Okay, so that's basically, to me, one of the useful things about this is really to, like, put in a symbol. Anything that any stock you come across, a symbol you might be interested in, just put in that symbol here and then looking at the summary. And then if you want to look at the actual data, you can go down here and look at the data as well. But actually the summary right off the bat is already giving you pretty good solid data on you know, analysis on it. And then if you want to go a little deeper, then you can go into these weekday stats, right, if you want to go deeper. But you don't even have to do that. So literally, in a nutshell, what I'm saying is you could literally just put your symbol here, put your number of days, and just look at this section alone, and that's already, to me, pretty useful just looking at this. You don't even have to go further. But if you want, you can go look at the numbers. It's interesting to look at the actual numbers. And then you can look at it by day of the week as well. You know, so anyway, get yourself a copy of this Google Sheet. I should have a link in the description of this video for you to get a copy of this Google Sheet system. And also my contact information should be below. You can leave comments, questions or suggestions below, or you can send me an email or use whatever contact information I provide in the video. So I look forward to either hearing from you or seeing you around on the channel. My name is Mr. Mark, and look forward to seeing you on another video.